Hey, welcome back to the Big Grand Show. Thank you for joining me. I know I don't usually do two videos in a day, but here we are because I just saw this news here. It's happened over the last few days, apparently, and it has led to a bank failing. Silicon Valley Bank, also known as SVB, of course, here by this picture, is a largely a tech lending firm that it basically lends to people, I guess, that are making tech businesses or even where they work in healthcare and things like that. And I wanted to discuss part of what caused the problem and why it may not be as big of a problem as many people think. Now, this is the biggest bank failure since 2008. It's the biggest failure since I believe it was called Washington Mutual failed in 2008. That kind of had a domino effect down the road that led to the Great Recession, as it's known as, where a number of banks had problems, or we had to bail out the auto industry and all sorts of things like that, right? Now, right now, regulators and the Fed do not believe that this bank is big enough to cause that cascading effect that destroys the economy overall. But what has caused this, according to the Moody's Credit Bureau organization, is that the rate hikes have caused problems for them. Now, what problems are those? Well, as the rates went higher for things, lending got more expensive, and tech companies quit borrowing money and stopped keeping money in these banks or as much money. So the banks didn't have as much revenue. And then there was a run on their money. People kept drawing down their money out until their accounts were getting lower. And the FDIC has had to come in and take over the bank. Now they've said that FDIC said that the people that have insured funds in the bank will get all their money back as of, I believe, Monday, and then later next week. Apparently, um, the people with uninsured money will get dividend payments from the FDIC to help cover what they've lost. Also, they will cover their basically what it says they're going to do is the FDIC will come in, liquidate all the assets, and then pay everybody that's owed money from the bank. Now, the thing is, they say this is not one of those too big to fail kind of situations where it's a small bank and it won't really affect that much of the economy. But it's definitely going to be have an effect on the people and companies that you have used this bank. It may not be a cascading effect that destroys the entire economy, but it's going to have an effect on the tech industry in general, especially the ones that use this. Um, but the thing is, the Fed is continuing to plan more hikes, and because they're trying to rein in inflation. Unfortunately, it's going to have some ripple effects. You're going to see banks like this fail. You're going to see people having harder times getting loans for things, especially business loans. And so, or they're going to come at, interest rates that people just aren't willing to pay. And it's going to squeeze out some of these smaller banks. And it's going to lead to, there again, bigger banks taking up more spots. And, and that's not always a good thing. So I guess we'll see down the road what happens. But I wanted to come on here and make this video about it. That it's not something to worry about. It's not something to panic about unless you're actually affected directly by it, because it's probably not going to affect your pocketbook or the overall economy. Anyhow, this has been the Big Ranch Show. I'll see you down the road. I'm going to try to make some videos for next week. We'll see what happens. And I will see you then.